All right, guys, there's a new trend emerging within the AI trade, and within that trend, I've identified a company that is on the cutting edge. Now, historically, the AI trade has been heavily concentrated into just a few names at the very top, the likes of NVIDIA, Palantir, and a few other data center / energy plays. Now, going forward, I think there's going to be a dispersion into companies that are actually generating or providing real value to companies on a sort of corporate enterprise level. AI is so much more than just chips and energy. At the end of the day, it's about productivity. It's about making businesses more efficient. It's about making employees more efficient. And whatever company is able to do that on a large scale, on a corporate enterprise level, is in a phenomenal position to make a ton of money. After doing a ton of research, I've identified a company that is on the cutting edge of this very trend. And the good news, if you are an investor, is that it's still very early. This stock is flying completely under the radar of Wall Street and even retail investors. The stock is down 70% from its all-time highs, but the recent Q3 results shows that the thesis is beginning to manifest into fruition. So without further ado, let's get into it. So the company that we are looking at today is none other than UiPath. So what does UiPath do? Well, to put it simply, UiPath builds software robots. So not physical robots, the digital ones. These robots are programs that watch what people do on computers and then automate repetitive tasks like copy, pasting data between spreadsheets and websites, filling out forms, sending routine emails, moving information between different systems, processing invoices, checking documents. So think of UiPath as hiring a super fast digital assistant that performs boring computer tasks automatically so humans can focus on more important work. So essentially, UiPath is a company that creates highly productive AI agents on a corporate enterprise level. So you might be asking yourself, why is this important? Why is this a big deal? Well, the reality is that so many corporations and businesses waste a ton of time and money on back-end, mundane, clerical work. And what UiPath does is they utilize very intelligent AI agents to automate these silly, mundane tasks in order to make their employees more efficient, thus reducing costs. So these AI agents are undeniably the future when it comes to this kind of work. And this trend is just beginning right now. And you'll be able to see it in the numbers later on this video when I pull them up. But historically, AI really hasn't been to a point where businesses are able to build powerful enough automations to actually operate effectively. But now that AI has advanced, it's now beginning to get to that point where they can truly compete with an average employee, right? They can truly make businesses more effective and reduce overall costs. And as I said, this trend is just beginning to take off right now as we speak. And what I really like about UiPath is that their stock has not been bid up yet. It is still down 70% from its all-time highs. And that is kind of a rare occurrence when you're looking at the overall AI trade, because so many names have been bid up already to sky-high valuations. So many of the names are no longer value plays, they're momentum plays. But UiPath, their stock is still down 70% from its all-time highs and is trading at a very modest price to earnings ratio on a forward basis. And as of now, their growth rate is ticking up, right? They've really turned the corner. They've been struggling the last few years because their technology was a little bit ahead of its time, and corporations weren't really able to see the value, and also AI was not built out enough for it to truly be productive. But that's beginning to change. This company is just starting to turn the corner, and this trend of automations is beginning to sort of grow and grow and grow as corporations are beginning to see the value unfold. So let's take a look at the chart of UiPath. And as you can see, it is down a lot from its IPO. It had a classic little post-IPO spike here, but from that $90 level, it is down 80%. So the stock's down a lot from its all-time highs here. And of course, part of the reason for this big decline back in 2022 was because of the Federal Reserve aggressively raising interest rates. So they sucked a lot of liquidity out of the market, and a lot of growth stocks really suffered as a result of that. But what I like about this chart is that there is no longer downward pressure on the stock price. You can see that it is now trading in this range. So it is range bound, right? There's no more downward pressure on the stock price. The stock is down 80%. But throughout this, bearish period here, the company has been growing revenue. It's been growing earnings, right? So the actual underlying fundamentals have been doing quite well. But what ends up happening with these growth stocks is a lot of times after they crash, like UiPath, a lot of investors just move on to other investments. They kind of get lost in the shuffle. So, when a stock is down 80%, everybody sells. And then they just kind of forget about the company. And I think that's kind of what's happening with UiPath right now, is just so many investors just moved on to other trades, especially in the AI sort of narrative where everyone is chasing momentum, right? Everybody wants to buy something that's going up. Everybody wants to buy something that's just smashing through all-time highs every single week, right? They're chasing momentum. And with UiPath, obviously, we're just range bound. There's nothing too exciting here. There's nothing that's attracting momentum traders, etc. And it's really flying under the radar of so many investors right now because the company just started posting really good earnings. And the market is just beginning to wake up to that fact. Now you can see here, they just reported their Q3 results just a couple days ago, and the stock shot up 25% following that report. And I actually bought the morning of the earnings report, so before earnings came out, and I bought a nice position. And the next day I was up 25%. So I'm certainly not complaining there, but it is also a little bit disappointing because I did want to build up a larger position, and now it's kind of hard to buy right after it went up massively. So hopefully we'll get another pullback here so I can build up my position even more. But overall, I really like the setup. I really like to buy beaten down growth stocks that are just kind of range bound, especially when the fundamentals have been improving the entire time. It's just a stock that got lost in the shuffle. It's just a stock that kind of got left behind. But now the market is beginning to wake up to its value once again. And another great thing about this stock is that you aren't chasing momentum, right? So if UiPath eventually continues to do very, very well on a fundamental basis, you're certainly not buying hype right now. You're getting into the stock before the momentum traders, right? Before there's established momentum. So realistically, if you're interested in this stock, it's still very early from that standpoint. So this is just a quick little analysis of the chart and technicals. So when it comes to the technicals, let's take a look at another company, which of course is Robinhood. Robinhood has done phenomenally this last year, but you can kind of see a similar pattern here with Robinhood, which is you had a massive spike after the IPO, and then of course a massive crash following the Federal Reserve and interest rates going to the moon, right? So Robinhood stock, after its IPO, if you look at the kind of Pico top here, it declined 90% from its all-time highs. So you had a massive collapse in Robinhood stock, but then what did you have here? Eventually, the stock bottomed and formed a range, right? It formed sort of this consolidation range. And that's very interesting because, again, as I mentioned before, it's kind of a setup I like to see, which is a very hyped up growth stock collapses at some point due to whatever external factor. The stock price comes down massively, and then it eventually bottoms out and forms a trading range, right? So if you were interested in Robinhood as an investment, the time would have been somewhere in here, right? If you like the story of Robinhood, if you like the fundamentals, this would have been a great time to buy. Any time in here, you literally had like 2.5 years to buy the stock, as it was just range bound, right? And that would have been a great time to buy if you believed in the company, because there was no more downward pressure on the stock price. It was a great growth stock. The fundamentals were still improving despite this period of chop. Despite the fact that it was down 90%, the fundamentals were still improving every single year, right? They were growing revenue. The story was compounding, but it took a while for the market to come back around to Robinhood. And of course, eventually it just went parabolic, right? So sort of since this period of consolidation, the stock price is now up 14x, right? 14 times your money, right? $1,000 would be worth $14,000. And it's like, so the time to buy Robinhood was in this period. You literally had 2.5 years to buy Robinhood after it crashed during this period of consolidation, right? There would have been no downward pressure on the stock price. It was just chopping, right? But eventually it broke out here, and then it became a momentum trade, right? So after it broke up, you're really just chasing momentum at that point. You were no longer buying based off of fundamentals. You were buying based off of momentum, based off of hype. But if you like the company, it would have been the best time to buy through here. But of course, most people will never do that because they cannot tolerate psychologically boring periods, right? Everybody wants to buy something that is going up. And in many ways, not to say they're equal, of course, but in many ways, the Robinhood chart during this period of consolidation looks very much like the chart of UiPath, right? So UiPath is kind of a similar setup, right? You had a massive crash after the IPO, and now it's consolidating. So of course, if the company continues to deliver on their promises and growth, it is not unreasonable to speculate that eventually this might break out and also go parabolic, much like Robinhood. So now that we have covered the business of UiPath and also the technicals, it's about time we get into the fundamentals. So the chart that we are looking at right now is total revenues, gross profit, and net income earned by the company. So this goes back to 2020 when they originally went public, and you can see that the trend is up. Every important metric here is trending up year over year. Every single year they posted more revenue than the year before. Every year they have posted more gross profit than the year before. And just recently, last 12 months is their first 12-month period where they have posted net income. So that is very important, right? Because you can see throughout their history as a publicly traded company, they have been unprofitable. But over the last 12 months, they have changed their unprofitability status to profitable, posting $229 million in net profit. So this is a company that has just begun to turn the corner. This is their first 12-month period of being a profitable, publicly traded company, and that is huge. And for me, I'm not somebody who ever buys unprofitable companies. I don't care how fast they're growing. I don't care about how they're going to change the world. I only buy stocks that are profitable and also free cash flow positive. And this company checks all of those boxes. So you have consistent year-over-year growth, and you now have a company that just began its status as a profitable company. And for me, that is huge. All right, so the company is growing revenues. It is profitable. So how about the cash flow? So here's a chart of the cash flows historically since they became public. And you can see early on, in the early days, they were burning cash. But now they are producing cash, right? The company is free cash flow positive. So the orange line is operating cash from operations, and the blue line is free cash flow. So you can see that they're pretty much in line here. So they have been generating free cash flow on an annual basis for the last 3 years. So it's a company with growing revenue. It's a company with positive EPS, positive net profit, and of course, free cash flow. Another really interesting metric to look at is their net income on a quarterly basis. Now, of course, this chart goes back to when they first began as a publicly traded company. And you can see the majority of the time they have been unprofitable, all throughout here, unprofitable, with a couple outlier quarters where they generated a little bit of profit. But look at what changed here. So look at what changed just recently in their quarterly filing. They came out with a massive spike in profitability, almost $200 million in net profit this last quarter, which is obviously an incredible spike relative to any other quarter they've ever posted. And that kind of falls into the thesis which I was originally making in this video, where UiPath is on the cutting edge of this new trend emerging within AI. And corporate enterprise clients are just beginning to see the value of their offerings. And that thesis is supported by this spike in profitability this last quarter, right? So there's been a fundamental shift within the company and also their customers. So to illustrate this point even more, the other day I actually wrote a little post on X here talking about how UiPath helped a very large enterprise client save $200 million over the next 3 years. So this is a screenshot from their most recent conference call transcript. And what I wrote here was, Path, creating real value for enterprise clients. $200 million in cost savings over 3 years for a single large client. Enterprise level automations will be a domino effect. If your competitor begins to build out automations, you will have no choice but to do the same. UiPath is positioning themselves as the leader of this trend, and you can buy into Path today at a forward PE that is less than the S&P. So this really illustrates that point that these very large enterprise clients are beginning to see the value in UiPath's offerings. Okay, so now to summarize everything we talked about in this video and why I am personally invested in UiPath. So number one, they are on the cutting edge of an emerging trend within AI, which is corporate level automations to reduce clerical work like back-end office work among these large corporations, making employees more efficient and their overall business more efficient as well. Number two, they are generating real value for their enterprise clients. So this is not a speculative sort of suite of products. These products are generating real value for their enterprise clients right now, and we highlighted that in the tweet that I just showed, which talks about how they saved one very large client $200 million over the next couple of years. So the stock price is beaten down. That's also very important. The stock price is down 80% from its all-time highs. It has no hype right now, so you're not paying any momentum premium. This is a stock that is just beginning to turn the corner, and not a lot of people know about it yet. So from that standpoint, it is still early, which of course, you gotta love being early. I prefer to be early as opposed to late. Number 4 here, they are profitable. This is a profitable growth stock and also an AI stock. So it's a profitable AI stock that is growing. So realistically, there are not a lot of those. So this one is profitable. So that's very ideal. They have accelerating revenue growth. That is also very key. So the company is growing revenues today faster than they were in the past, which means that their products or services are resonating with their customers. They're also free cash flow positive. So it's profitable, it is accelerating revenue growth, it is free cash flow positive, and it is generating real value for their enterprise clients. These are all very, very good. And they just turned the corner regarding profitability, meaning that it's still early. So as we highlighted earlier in the video, this most recent quarter was unambiguously their most successful quarter in terms of profitability. So they're just beginning to turn the corner of profitability, again, meaning that it's still early. And then to top it all off, the icing on the cake, they trade at a forward PE that is lower than the S&P 500. And that's something you do not see every day. You do not see an innovative company on the cutting edge that is accelerating revenue growth that has a PE that is lower than the S&P 500. That is extremely rare. I don't know if I know of any other setup quite like this. And that is why I am bullish on UiPath. All right, guys, that is my analysis on UiPath stock. If you made it this far, I really appreciate it. I just started this YouTube channel, so if you found value in my analysis, I would greatly appreciate it if you hit that subscribe button, and also follow me on X, link in the description. All right, guys, thank you so much.